Welcome back to Investing Talk Podcast. Sometimes a company hits the news and it's just a blip. But other times, there's a deeper story unfolding. And that's what we're seeing with Pfizer. Ticker symbol, PFE. They've had some big announcements lately, mixed with a few eyebrow-raising developments. And analysts are going back and forth, trying to make sense of it all.
Yeah, it's a fascinating mix for sure. You've got this tension, between solid financial projections and then some of these external factors that are spooking the market a bit.
Okay, so let's break this down for our listeners. What's the most exciting piece of the puzzle right now? What has investors buzzing?
Well, Pfizer's own guidance is pretty bold. They're projecting double-digit earnings per share growth by 2025. And to achieve that, they've also laid out a plan for $4 billion in operational savings. So that suggests they're serious about streamlining and boosting their bottom line.
Yeah, $4 billion with a B. That's a lot of savings. And it's not just talk. Their stock prices actually climbed 5.6% in the past month. Clearly, some investors are buying into this optimistic outlook.
Right, but that's just one piece of the story. We have to look at what's driving that growth.
Yeah.
It's not just cost-cutting. They're making some strategic moves, especially in their oncology and weight management pipelines. That could lead to some serious revenue down the line.
Yeah, and that's where I think it gets really interesting for our listeners. Everyone wants to know, is this a short-term bump? Or is Pfizer setting themselves up for long-term success?
That's the million-dollar question. And to answer it, we have to look beyond the hype and dig into the specifics. For example, their acquisition of Seagen is a major play in the oncology space. Seagen is known for its targeted cancer therapies, so this move signals a commitment to becoming a leader in that market.
Okay, so they're clearly not sitting still. But I know you mentioned some potential bumps on the road, too, things that have investors a little hesitant.
Exactly. There's this cloud of uncertainty hanging over the entire pharmaceutical sector right now. Robert F. Kennedy Jr.'s nomination for health secretary has a lot of people worried, particularly investors. His stance on pharmaceutical companies, it's exactly a secret. So
It's understandable that the market's reacting with some nervousness.
yeah, that's something our listeners definitely need to keep an eye on. We're not making predictions here. But any major policy shifts could have a ripple effect throughout the industry. But even beyond the political landscape, haven't there been some technical signals? Flashing warning signs?
You're right. If you look at the technical analysis, things get a bit murkier. For example, there was a recent 5-day EMA crossover, which historically tends to precede a downward trend in price.
So we've got these conflicting signals here. On one hand, strong financial projections and some exciting developments in their pipeline. But on the other hand, political uncertainty and some technical indicators suggesting a potential dip on the horizon. This is where it gets tricky for investors, right? Absolutely. And this is where you, as an investor, need to assess your own risk tolerance and investment goals. Are you comfortable writing out some potential volatility if it means getting in on a company with strong long-term potential? Or do you prefer a more stable, predictable investment, even if it means potentially missing out on some big gains?
No easy answers here. But that's what makes investing both challenging and rewarding. You have to weigh the risks and the potential rewards and make a decision that aligns with your own personal strategy.
And remember, we're only scratching the surface here. There are many other factors to consider, like Pfizer's dividend history, their current valuation, and the competitive landscape within the pharmaceutical industry.
Lots to unpack, but before we dive deeper into those details, let's take a step back and think about what we've learned so far. For our listeners who are considering Pfizer for their portfolios, what are the key takeaways from this initial analysis? What should they be thinking about right now?
Well, the first thing that jumps out at me is their ambition. Pfizer is not content to rest on their laurels. Even after the massive success of their COVID-19 vaccine, they're actively pursuing growth in new areas, which I find pretty compelling.
That's a good point. It would be easy for them to just coast along on those vaccine profits, but they're choosing to reinvest and diversify. That shows a forward-thinking mindset.
Exactly. And that brings us to their pipeline, which, in my opinion, is their biggest asset right now. Their focus on oncology in particular is quite strategic. It's a rapidly growing market with huge potential, and their acquisition of Seagen gives them a real edge.
I've been reading about Seagen too, and I'm curious to see how that integration plays out. It seems like they're betting big on the future of personalized cancer treatments.
It's a high-stakes bet for sure, but if it pays off, it could be a game changer for Pfizer and for patients around the world.
Okay, so the pipeline is promising. They're making strategic acquisitions. and they're projecting strong earnings growth. But we can't ignore those uncertainties. We talked about earlier, how should investors be thinking about those potential headwinds?
The political landscape is definitely a wild card. We don't know what policy changes might be on the horizon. And that uncertainty can make investors jittery.
Especially when it comes to healthcare, which is such a heavily regulated industry. But what about those technical indicators? Are they something to be concerned about?
Technical analysis can be a useful tool, but it's not always a perfect predictor. The recent 5-day EMA crossover suggests some potential for a short-term price decline. But it's important to remember that these indicators are based on past performance and don't necessarily guarantee future results.
So it's a data point to consider, but not necessarily a reason to panic and sell your Pfizer stock.
Right. It's all about context. If you believe in Pfizer's long-term potential and you're comfortable with some volatility, then a short-term dip might actually present a buying opportunity.
That's a great point. Sometimes those dips can be a chance to get in at a lower price.
Exactly. But of course, it all depends on your individual risk tolerance and investment horizon.
And speaking of individual investors, I think it's time to address the elephant in the room, Pfizer's COVID-19 vaccine. It was a monumental achievement, both scientifically and financially. But how does that success factor into their future prospects?
It's a double-edged sword in a way. On the one hand, the vaccine generated massive revenue and propelled Pfizer into the global spotlight. But on the other hand, it also created this perception that they're a one-hit wonder reliant on a single product.
And now that vaccine demand is declining, investors are wondering if they can sustain that momentum.
Right. That's why their diversification efforts are so crucial. They need to show the market that they're not just a COVID-19 company, but a company with a broad portfolio of innovative treatments and a strong pipeline for future growth.
So in a way, they're using the success of the vaccine to fuel their transformation into a more diversified healthcare company.
Exactly. They're leveraging those resources and that brand recognition to establish themselves as a leader in other therapeutic areas.
Which brings us back to that key question. Is Pfizer a good investment?
There's no easy answer. It depends on your investment goals, your risk tolerance, and your assessment of their long-term strategy.
What advice would you give to our listeners who are trying to make that decision?
I would say look beyond the headlines. Don't just focus on the past success or the short-term market fluctuations. Dig deeper into their financials, their pipeline, their management team, and their overall vision for the future.
It's about understanding the whole story, not just one chapter.
Exactly. And don't be afraid to ask tough questions. What are the potential risks? What are the challenges they're facing? What are the catalysts for growth?
Investing is about asking those questions and forming your own informed opinion.
And remember, there's no shame in seeking advice from a financial professional. If you're feeling overwhelmed or unsure, talking to an expert can help you make more confident decisions.
Great advice.
Yeah.
We've covered a lot of ground in this episode, but we want to hear from you, our listeners. What are your thoughts on Pfizer? What aspects of their story stand out to you? What are your biggest questions or concerns? Share your thoughts in the comments below, and let's continue this conversation.
It's interesting to think about how much has changed for Pfizer in just a few years. You know, they went from being this kind of behind-the-scenes pharmaceutical giant to a household name thanks to the COVID-19 vaccine. But now they're almost trying to reinvent themselves for the next chapter. It's a smart move, in my opinion. They could have easily become complacent, but they're choosing to be proactive and position themselves for a future where that vaccine revenue might not be as dominant.
Yeah, it's like they're saying, hey, we were the COVID vaccine company, but that was just the warm-up act. Now watch what we can really do.
Exactly. And that's what makes this such a compelling story for investors. Are they buying into the legacy of Pfizer? Or are they betting on this new, more diversified version of the company?
There's definitely an element of risk there, as we've discussed. The political climate, the market volatility, the competition, these are all factors that could impact their success. But for investors who are looking for growth potential, Pfizer has a lot to offer.
Especially if you believe in their pipeline. Their investments in oncology and weight management are quite promising. And if those treatments prove successful, it could translate into significant revenue streams.
And let's not forget about their dividend history. For income-focused investors, that consistent payout can be very attractive, especially with a yield hovering around 6%.
Right. And for value investors, the fact that Pfizer's currently trading near its 52-week low might be a tempting entry point. It's like they're on sale right now.
But as we've emphasized throughout this episode, It's crucial to do your own research and make an informed decision that aligns with your own investment goals and risk tolerance.
Absolutely. There's no one-size-fits-all answer when it comes to investing. What might be a great opportunity for one person could be a disaster for another.
So to wrap things up, what are the key questions our listeners should be asking themselves as they consider Pfizer for their portfolios?
First and foremost, do you believe in their long-term strategy? Are you convinced that they can successfully transition away from their reliance on the COVID-19 vaccine and build a more diversified and sustainable business?
And if the answer is yes, then the next question is, how does Pfizer fit into your overall investment strategy? Are you looking for growth, income, value, or a combination of these?
And finally, are you comfortable with the level of risk involved? No investment is guaranteed, and Pfizer certainly has its share of uncertainties.
Those are great questions to ponder. We've given you the information, the insights, the different angles to consider. Now it's up to you, our listeners, to make the call.
And remember, we're always here to help. If you have any questions or need further guidance, don't hesitate to reach out.